G'day everyone, welcome back to Pete's Investing. Here we're talking a special strategy edition using the CCI150 and moving averages of the CCI150 and the average down technique. So what I have here is the price chart in the middle. On the bottom we have the CCI150 indicator, and I'll zoom into that in a minute. And up here we have the profitability chart of each trade as it progresses. This is on the 4-hour chart. It goes back to end of 2013 up until today, which is the 14th November 2022. And this little indicator or chart here shows the steps or the number of times the contract is entered into that trade. So here you can see there we've got 15 contracts entered, and some of these smaller ones, for example there, one contract and little minimal contracts there. So the way this works is, let me just drill down into and zoom into this area. So again, when a bar is shown there, it means the contract is entered, the position is entered. And when it finishes, it means the contract or the position is closed out. So we're going long here only, and I've got the same logic applies for going short. We're just demonstrating here going long only. So you can see here, the entry criteria is, this is the CCI150, the black line. The blue line is the moving average of that CCI150, and the red line is the moving average 20 of that. So the entry parameters are whenever the CCI150 breaks up and past the moving average 5, or breaks up past the moving average 20. Now, this little trade here is entered when the CCI150 breaks up through the moving average 5. It enters one contract, as indicated by that. The exit criteria is when the CCI150 breaks down, going from the latest CCI150 is lower than the previous CCI150. Hence, it closes out the trade. And as part of that exit criteria, you must gain at least 0.5% gain in the trade. And that's indicated by that little dotted ruler or ruler box. So that's showing a trade and exit of a single trade. So you can see there we started off with a profitability at 219,232. It closed there with 219,503, so I made a couple $100 on that trade there. To average down, we enter the same entry criteria when it crosses over the moving average 5. You can see here the price falls and it drops by at least 0.5%. We enter and the exit entry criteria is met. We enter another contract and we exit when a 0.5% gain is made on the average price now. So remember, the average price is somewhere between the first contract and the second contract. There'll be a new average, and that exit criteria is above that, and we also, that must be a 0.5% gain from that new average price. So that's entering and exiting and averaging down on that. Now what I'm showing you here as well is I've got the 4-hour chart with the program trading over here, and on this side we've got the daily chart. And the reason I'm showing you the daily chart is we've got the CCI150, which is part of our common indice we're using on the bi-weekly index review, and we're taking primarily long trades in this case because this is a long entry program only strategy. So we're going to take long trades between that point to that point when the price is going in a northerly direction, and that's indicated by these vertical bars. So you can see there's minimal contracts entered because it's going in our favour, although there still are some averaging down happening, and that's only because the price goes against us. And as you can see, there is more steps added or more contracts added whenever the price goes against us. So to minimise that drawdown, we try and choose a period where the price is going in our favour on the longer time frame, such as the daily when trading the 4-hourly. So in other words, when the price starts breaking down into a negative moving average, when it's going into a southerly direction, such as this case, we don't take long trades. In other words, we stop trading from there on to avoid a bigger drawdown. Now in cases such as this where the entry is already made, we simply stop trading and stop adding contracts to that position. So there we would have stopped around the point of adding the third contract, and we wouldn't have added any more because the price now goes against us. We wait till a more positive move to average down again when the price goes on the daily, starts moving upwards again. So in this case, you would have still been in a trade, but with only 3 contracts instead of building up all this negative drawdown. Now I've also added this other program which does exactly the same as the our long strategy here with the same entry parameters, except this one uses stop losses. So I just want to show you the benefit of using the average down technique versus using stop losses. So in this case again, I exit the trade with a stop loss when the price goes against us with a 0.5% drop and the exit parameters are met, and I exit the strategy with a profit take, the same as this one here, when the 0.5% gain is made with the exit strategy that we indicated earlier. As you can see here, the profitability of the stop loss strategy is still profitable over the period, with 118,875 for the stop loss strategy versus 284,361 for the average down approach. So it generates an extra over almost whatever that is, 160 plus $1,000 more using the average down approach. Even though you go into a drawdown, you've got to be prepared for that. Just be mindful. It does produce a lot more generous returns. So where does our latest program rank amongst our list of programs tested so far? So again, what we're showing here is the indices tested, and this shows the revenue for those indices over the period for the 4 hours. And for the same indices, this shows the drawdown effect of each of those and the percentage profit over drawdown. So it's basically that number over that number gives us a percentage. And down here we rank them, the most effective profit over drawdown ranked in sequence. So where does our program rank that we've tested today? So if I scroll across, you can see here, this is the program we tested, and it ranked 37 overall. So not the best result, but still profitable if you wanted to generate total, since what we say 2013 was generated about $236,000 with a drawdown total of 173 total of all those combined. So total profit over drawdown was 150%, which is ranked 37. Here are some of my investing rules: buy proven blue chip stocks, buy stocks which pay dividends, don't short positions, go long only. And the reason for that is you want to receive those dividends when they're paid, and don't trade on news. Price is already factored in the share price. Thanks for watching. Don't forget to click the subscribe and the like button, and click the notification bell to get all updates. Market updates will be posted on Mondays and Thursdays each week. If you want to support the channel further, then subscribe to the Patreon page. The link is in the description below. Happy investing, and speak to you in the next video.